All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market here this morning, it's set for a very interesting open, and just wanted to jump on board and show you here. I'm not looking to trade it for the challenge or anything like that. We will kick off the new challenge Friday morning and run from there. But this morning's open is really interesting in my opinion. We see S&P futures up about 10 points, right? That's where they sit, and fair value is pretty flat, so that's a good indication of where the market's going to open up at here over 10 points. And, in most markets that would be something. But last night we saw S&P futures up over 22 points, and it still didn't eclipse the lunchtime highs of the market. And that's kind of an indictment here on the market and this gap. Not kind of, it absolutely is an indictment on the market here, but does make this level interesting. This 2750 level pretty interesting from a short-term standpoint. If you're looking to be a buyer, to buy above 2750 using kind of some of the overnight lows as your stop point, makes a little bit of sense if you're looking for a rebound buy. But overall here, it's not a massive, major key type of level out there in the market. You can see the closing volume we had yesterday, over 60,000. And I was asked if that's was a huge volume, if that's something significant. And let's just come in and take a look at the 1 hour. You can see the last hour, the volume in the market yesterday. It was greater than any other day since the Friday where we had, or last Friday, not last Friday, but the Friday before where we had that sell. Is it all that fantastic? No. And when we look at some of the volumes we had in the last hour down here near the market lows, we're nowhere near that level. So yes, it's some volume, but it's not, it's not enough volume for me to look at and go, oh, okay, let's trade off of that, and let's go react here to that. I think one of the more interesting things in the market is we have analysts changing a little bit in terms of their tones. We have different stocks being talked about here and there. But analysts like Bank of America, Merrill Lynch, coming out and really talking about the market itself, a lot more just talk about the broader market than individual stocks. When that happens, when we see that happens, path of least resistance tends to be lower overall. It tends to, we tend to see the market kind of get beat down here. When that chatter comes in, and look, there's chatter from market's going to go set new highs to we haven't seen the major low yet. Whichever opinion you want, it's out there in terms of what the market's going to do. A lot of times when we see a big calls for rally and big calls for sell-off, a lot of times we'll see the market just consolidate. And we've talked about the path of this market and, the risk of that kind of, all right, maybe the lows are in, but it doesn't necessarily mean that, we're going, full tilt and the market's just going to go straight up. The market's going to have, some pretty sizable pullbacks along the way. And, we even have a decent little roadmap from February, March, April, May of how that could look and how it's more, it never repeats, but you know what, it can come pretty darn close. And, we're kind of in that situation right now with the market, and right now, to me, it looks like this type of down leg right here. And, okay, great, fine. Where does that end? Do we see a rebound back? I wouldn't be surprised to see a rebound back and then another leg back down where it's blood, guts, and gore. And then, okay, here we go. That would be and I hate to say this word, but normal, right? Market movement and swings like this. This is some normality coming back to the market. At least for those that have traded for 20 years, the abnormal is 2017, where basically it's yawn snooze. 2016 yawn snooze. So it's one of those where we have some normality coming back into the market. And I know that creates a lot of angst, a lot of anxiety for many traders. It boots a lot of people out of the market. It is one where when you make your trade, you could be right very quickly, you could be wrong very quickly, and it's one that displaces things, creates opportunities, but it's not one with a lot of certainty. Yesterday, I gave my thoughts on the whys of this market correction in the training video. I did it at the beginning. So if you want those, go ahead and check it out. But I think the whys much more, as I look at this from a bigger picture, and I look at the timeline of how everything is played out, to me, this is just a fund manager erosion in confidence of the Fed. Combined with a less than rational fear. I'm not going to say it's irrational, but it's less than rational, when it comes to earnings here overall. So anyway, market has pulled back on some of those, but coming back into some retracement areas. For me, I'm much more interested in being a buyer on a gap down than I am on a gap up. On a gap up, I'm a little more interested in being a seller, given the way the internals look right here, given the way the overall market looks right here. I think this is one of those markets where if yesterday's lows get wiped out here today, the path of least resistance on the market is going to be lower. It probably flushes here a little bit. I'll be looking, do we see a little bit of rally here this morning? Do we see some sort of pop above 2750 and then fail, to get above it? That could be an interesting little short sign there. But in all, I don't think the market's at a major inflection point where we can say, oh, well, you know what, just go buy and, you're golden. There'll be a few stocks that have, some interesting gaps, but the magnitude of these gaps across the board are very light. Are very, very light here, and not something that I look at and say, oh, okay, you know what, that's a big deal. Now, one thing that I do find to be very interesting is the FXI, China. We saw China yesterday. Yep, it went down as the S&P went down. It went down a similar percentage. But the China market has a higher beta, which means if the S&P is down 1%, it's normally down 2% or something of that magnitude. And it didn't really underperform the markets yesterday. And this morning on the gap up, it's going to be outperforming the S&P this morning. The FXI is set to gap up here, about 75 cents, 65 cents? And, the S&P is set to gap up 7 points, which is, 0.2, 0.3%, right? So major gap outperformance here in China. This is one of the stories, and we've talked about this and the potential of this, setting up this rotation back into China and emerging markets as we go forward. Now, it has a massive headwind right now in the U.S. dollar, but we see the U.S. dollar getting hit overnight after yesterday's move. And yesterday's move, wow, that's a massive move. Today it's going to, be down about 10 cents here on the open. But we talked yesterday that China didn't hit a new low as the U.S. dollar hit a new high. And we haven't seen that very often. The emerging market stocks didn't hit new lows as China hit a new high. Now, they're not far from it, right? They're not far from it. But if we start seeing a little bit of outperformance on the upside, something like EEM, looking to buy it around this level for a move back to the 200-day moving average starts to make a little bit more sense than what it has, previously. And so an area I think is worth noting, an area I think is we're seeing something a little bit different going on, but an area that's still going to, still ultimately is going to have maybe not its trend challenged by the trade news that comes out this month, but, we'll have a few days where, its price action is going to be highly driven by that trade news that comes out. For those looking for an all-clear sign in the market, looking for a canary in the coal mine type of deal, looking for that, hey, you know what, everything's rosy again, I think you have to look at Apple. I think you have to look at Apple and you have to say, okay, is Apple outperforming the market? Right now, it is lagging the market in a big way since its earnings. We've talked about it, rightfully so. Rightfully so. But it's one of those where the earnings, the sell-off wasn't due to iPhones and that kind of charade there. Sell-off due to projected revenue growth going forward, looking a little slower than what had been previously thought. And yesterday got hammered on a downgrade, wasn't really able to bounce much. It closed near its lows. Even though the market's gapping up today, Apple's going to gap down here to its 200-day moving average. Bulls need to see it firm around here. Really need to see it firm around here. If it firms around here and we start to look at Apple and go, oh, wait, market's down 30 points, Apple's up $2, I think you can look at the market with a lot more type of rosy picture and say, all right, you know what, it's ready to go now. Maybe I could go buy some Apple. Maybe I could go buy some of the other things on your watch list. But as long as we see Apple lagging, it's a point where I think path of least resistance will be a little bit lower, and that is just simply because you look at Apple, you look at the ramifications of Apple. What fund managers aren't involved in Apple, right? I mean, fund managers en masse are involved in Apple. It is something where they've had to be in, and it is something where they are taking it on the chin right now with Apple. And, yeah, I mean, it's not, train wreck or anything like that. It's, right back to where it was in May, June, and July, which is still up on the year, which is still outperforming most stocks out there and still outperforming the market overall. But the questions, the question marks have increased here for Apple, and is something that, will have investors, a little bit nervous, a little bit on the sidelines. So when you see Apple start to outperform a little bit, that's probably your, okay, you know what, market's ready to go as long as it lags. We're probably talking about path of least resistance here to the downside. Okay? So anyway, those are a couple of my thoughts here on the market open, here this morning and what we're seeing out there. I will jump on here a little bit later. We'll talk about this concept of making consistent money in the market. This concept of, I want to make X amount of dollars every month in the market. How do I do it? We'll talk about this concept. It is a concept that I get asked about from time to time. We've talked about it, many times in the past. But I'll talk about it here again as I've had some specific questions come up on it. I'll share with you my thoughts. I'll show you some ways that you can do it. But I think you'll find my thoughts are maybe not as positive or on that comment. And I'll show you why. I think, making consistent money in the markets is kind of a pipe dream for the most part and for what most people are looking for. But then I'll show you how, some major institutions do it, how fund managers will do it. I'll show you how, we did it in our fund, where we would put aside a certain amount of money so that we knew month after month there was some consistent growth coming in that could be accounted for. And I'll show you that here and, some of those ways to make that happen. I do want to watch the market open, in a little bit here. So once the market kind of settles out a little bit here this morning, I'll jump on and we will talk about that topic here. Again, thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.